Ladies and gentlemen, realtors at home, the buyer consumer, if that's you, that piece of paper that you hold in your hand that says, congratulations, you've been pre-approved for $1 million is not worth the paper it's printed on. Welcome back to today's episode. As you can see, we're in a little bit of a different format. We're going to be doing our first podcast. We're going to be talking a little bit with Riley about some basic stuff that all realtors should know and every buyer who is getting ready to secure a loan to buy a house needs to know. And so you clicked on this video because the title says, why did my offer not get accepted? We're going to cover that in depth on today's video. This was a special video that I was only going to do behind the scenes as part of regular sales training with Riley with a whiteboard. But as I started talking through the material, I realized that this is something I want the general public to know. And I also thought very carefully about this because I realized that if I was going to give this information to the general public, I was definitely going to piss some people off. So if you are a realtor, you will appreciate this information. If you are a buyer who's getting ready to get a loan so you can finance your purchase, you are really going to appreciate this information. If you are a mortgage broker or a bank, you are going to be very upset with me by the time the end of this video is over, and I'm not sorry. So Riley, what's up, man?
Hey man, how's it going?
Everything's going good. I am excited that you are a member of the team. One of the coolest things about being new to real estate is that you have the world ahead of you to learn. You haven't learned any bad habits, and it's a fresh slate. So here's what happens, and to our people at home, it almost always looks the same, okay? And we're going to cover in depth on today's podcast exactly what we need to do to ensure that our prospective buyer, our client, has the best terms necessary to negotiate the best deal possible and the least amount of risk to them. Now, you're going to hear me say a lot, buying a house is not like ordering a pizza. There's a lot of moving parts. There are times it gets a little bit dicey. And quite honestly, if it's not done correctly, the risk is tremendous. But it doesn't have to be that way. And there's a huge misconception in the industry about how easy this job is, because it's not easy. It's difficult. And you have people's dreams in the crosshairs. Okay? We're talking about people who have worked their entire life to put together a down payment, to scratch together that money, so they can throw it into a purchase, which eventually is going to be their life's biggest asset in most cases, for most Americans. So when you look at a home that's $500,000, it's $500,000. And that's a big asset for the average American. Okay, so it's not taken lightly. So Riley, to answer your question, here's what happens, and it almost always looks exactly the same. The buyer is on the phone and he calls a realtor. And he says to the realtor, hi, I'm interested in going shopping. And the realtor always says this, excellent, you come to the right place, I can help you. Were you seeking to acquire financing to purchase this home? Or did you plan on using all cash to acquire the home? Response, buyer will say, oh, well, we're going to use all cash. And if that's the case, great, because a cash transaction makes everything easier. It's super easy. It gives you great leverage in negotiation because everybody likes cash. Cash is king in real estate. The only thing you need from a buyer who's using cash is a proof of funds. What is a proof of funds? It's going to be a recent bank statement, recent like last 30 days. Name at the top of the bank statement. Name needs to match the name of the prospect. Can't be somebody else's bank statement. And the amount of money that's reflected in the balance needs to be the amount of money that can afford the purchase plus closing costs. And finally, the bank statement should be in liquid funds. So if somebody sends you a bank statement where they have different types of investments, like bonds or stocks or something like that. They can be liquidated, but they're not necessarily liquid. So what you're looking for is like a checking account or a savings account. Sometimes people send their 401k. It's questionable. Some people will liquidate a 401k, which is a retirement account, to purchase property. Sometimes they don't. They say, well, no, I'm not going to do that. They go to financing instead. That becomes a little weird. So what I like to see is a checking account or a savings account with the funds. Sometimes a standard brokerage account, like a stock trading account, is okay because if they sell stock, it takes 3 days for the funds to clear and they get the cash in. But there are other accounts like retirement accounts, which become a little bit more tricky. And sometimes a buyer will just show you that document to try to create the illusion that they have the funds to be a cash buyer. I would want to ask more questions about that. I'd want to qualify that. Hey, listen, Riley, I see that you've sent me your 401k and I see that there's $1 million there, and that's great. Was it your intention to liquidate your retirement account for the purpose of acquiring this property? And let them answer. If they say, yeah, I'm doing that, great, cool. Just want to make sure we're on the same page. If they say, well, no, I was thinking about doing something else, well, then guess what? They're not a cash buyer. Well, what were you thinking about doing? Well, I was thinking about using a portion of that, and I was going to finance the rest. We're not a cash buyer. We're going back to the finance conversation. So here we are. Now we have the other half of the way this goes. Person says, no, Joe, we're thinking about getting a loan. Great. The next question is very simple. Have you already gotten a pre-approval, or did you need me to introduce you to somebody who's great to get you a pre-approval? 50-50. Sometimes they have it, sometimes they don't. If they don't, great. We know somebody who does amazing work that can help them get the pre-approval done, and the majority of this podcast is going to be about that. More of that in a minute. But when they say, well, yeah, we already have a pre-approval, we got it from our bank that we do regular business with. Now, when that happens, if you could see the face of every realtor on the other end of the phone, when the client says, we got a pre-approval from our bank that we do regular business with, usually the next question is, what bank or what lender or what company? And if you could see the face of the realtor on the other side of the phone, they're going like this. Now, they're not telling that to you over the phone, Mr. Client, because you are a prospective client and you could be our next potential sale. So we're communicating to you over the phone that everything's just okay. When meanwhile, on the other side of the phone, we're going, ah. And the reason why, Riley, do you know?
No, I do not.
The reason why is because when they get a loan from their bank or somebody who's not recommended by the realtor, automatically what the buyer has just done is assumed a higher level of unnecessary risk, assumed a lower level of negotiation tools to help them get the best deal possible. And they've also unknowingly, usually the buyers don't know this, put themselves in a situation to not close in a timely fashion. Now, some people say, oh, that's all right because we got plenty of time. That's not what I'm talking about. What I mean is meeting deadlines that are specified in the contract, that are in writing. That bank who you do your regular business with, checking and savings, is notorious for doing terrible jobs at meeting these deadlines. The reason why the realtors are on the phone cringing is because they have an opportunity here to help someone get into a house, help a family, get a solution. They have an opportunity as a salesperson to earn a commission. Great. But they also realize that there's a new challenge, a new task, an unnecessary problem that is in the way of streamlining the prospective client from destination A to resolution B. And so what should the realtor do in that situation? Do you know? Okay. Here's what the realtor needs to do. Communicate. The number one complaint in the real estate business, the number one complaint that the consumer has about people like me and you, realtors, licensed realtors, is their lack of communication. There's a couple of reasons for that. Sometimes, well, most of the time, the realtor has no idea what they're doing. They're completely clueless. They're brand new to the business and never been trained. Sometimes they're completely incompetent, meaning they've been in the business a long time. They've been trained. They received all types of exposure to the right type of training, but they don't care. They don't care. And they're out there running around just wheeling and dealing business, or at least trying to wheel and deal business, and they're failing to communicate to their clients. Then they have some realtors who are just too busy. They're just too busy doing whatever it is that they do, and they don't take the time to pick up the phone or send a text message or send out an email. And this is a stigma that our industry has, that realtors are aloof and they're not doing the right thing. By the way, shout out to Reform Realty, South Florida Homes and Luxury Estates. That's my brokerage that I own. The reason why I named the company Reform Realty is because I believe that our industry as a whole needs a reformation, major change. Everyone needs to be retaught. It's the realtor's job to communicate to the client everything that they need to know from a consultative standpoint that's going to help them have the best experience possible with the least amount of risk and the highest upside potential for them to score a good deal with great terms. Now, people at home, to be totally fair, even though we already know that realtors do a very bad job at communicating, the prospects, the consumer, the buyer, they need to do a better job of communicating, listening to their realtor. So, consumers at home, if the realtor fails to communicate to you the advantage of working with the right lender to get the deal done to the best of your interest, that's on the realtor. That's their fault. That's them providing you a disservice. However, if the realtor does a great job at communicating what this podcast is all about, then there's no reason for the consumer, the buyer, to assume unnecessary risk, to step into a poor service cycle, to limit themselves in the arena of negotiation, which they're about to get into if they're going shopping for a house. It then becomes whose fault? The consumer's fault, because you're not listening, or don't want to listen, or maybe they don't understand, which then it comes back to the realtor. They did a bad job of articulating. So one of the goals of this podcast is to help articulate to the consumer and other realtors the value of working with the right lender under the right terms in any market, in any geographical location, which again, and I'm going to repeat myself, gives the consumer, our clients, the least amount of risk, the best upside potential, and the best service standards that you can possibly imagine in this industry. So here's what happens. Mr. Buyer says, yeah, we got a pre-approval from our local bank. So what I'm going to do instead is I'm going to refer to these mega banks and local banks by some symbols. And the folks at home and you can use your imagination and probably understand just through some very basic logic who we're talking about. Let's just say, for example, and it's always the same. The buyer says, Joe, I went ahead and I got a pre-approval done from my local bank. And my local bank is a mega bank. Maybe it's not a mega bank. Maybe it's a credit union. And you guys all know what those are. Maybe it's not a credit union. Maybe it's a community bank. And an example of a community bank that I see from time to time on a mortgage statement or a mortgage pre-approval letter will start with the letter T. And maybe it's not a mega bank or a credit union or a regional bank. Maybe it's an independent loan officer. Maybe it's somebody who sounds like the word rocket ship. Or maybe it's somebody who sounds like the word quick fast. And if you're picking up what I'm putting down, these are all companies that are out there that write mortgages for interested buyers. The problem is this, going back to the realtor who's making the face over the phone like this, is that every one of those banks that I mentioned puts the buyer at a major detriment when they're getting ready to enter the marketplace to try to score a deal, to try to limit risk, and obviously there's going to be some service standards that are attached to the process. Every one of those companies that I just mentioned completely misses the mark. Completely.
How do they do that?
Great question. And that's going to be the deep dive that we're going to do in this podcast. Here we go. You ready?
I'm ready.
Here's how they do it. We have 7 major reasons that I've distilled for the purpose of making this podcast as simple as possible that anybody can understand. And here's the first point. When you go to one of those entities, immediately right up front, you have a major service flaw. This is the part where the banks and the loan officers are going to get super pissed off at me. You either call them on the phone or you walk into the bank branch and you sit in front of them. And the person who is sitting directly in front of you is friendly. They're intelligent. They seemingly care about your banking relationship. And I've been at the same bank for a very long time now. And I have all my checking and savings and IRAs and investments at this one particular bank. My bank does a good job of making me feel special when I walk into the major location. And I deal with a regular mega bank. So I walk in and I sit down and I say, hey, I'm thinking about getting a mortgage. Can you give me a better deal? Because everyone's looking for a better deal. And what do they say? Of course we can. Of course we can give you a better deal. For you, absolutely. This is what corporate America is trained to tell their clients because they want to retain their business. Not only that, but the person who works in corporate America that sits behind the desk at the bank branch is a 9-to-5 employee getting paid a fixed salary anyway. And some of these people, they get paid incentives and commissions to write a mortgage loan for you anyway. Here's the problem. If you get declined on your mortgage application, guess who doesn't feel the pain? Them. Because you're just another number in the system. They have a goal. What's the goal? The goal is, Riley, that if you work at this bank and you work 9 to 5 here, there's only so many people that walk through that door of that branch. Of the 100 people that visit here today, we need you to talk to at least 10 and sign up at least 1. So they don't care. They don't care. All they care about is getting you to sign. Well, Joe, that's not fair. That's not nice. I have friends, I have relatives who work in the business and they care. Maybe they do care. Here's the thing. After they sign you up and they care, what happens is they take that file and they scan it into their computer system or whatever. They take it from their desktop and they push a button. That file goes to a stranger in the cloud. And that stranger is somewhere in the United States. Sometimes it's New York City, sometimes it's California, sometimes it's North Carolina, sometimes it's Chicago. And some stranger is looking at your file and they don't care. They don't get paid to give you a loan. All they get paid to do is crunch the numbers to make sure it fits. Problem is this. The person that you just met with shook his head and said, yes, yes, yes. They sent it to a stranger who doesn't know you. The stranger does minimal work to underwrite your file. And then they give you a document that says, congratulations, you've been pre-approved for the amount of X in big letters. And they give it to you and they say, congrats, go shopping. Ready? Realtors, be careful now. Your client then finds you and says, hey, we got a pre-approval from W Bank. And then realtors who don't know better and haven't been trained, who are new, maybe they've been trained or they don't, whatever, they go, great, let's go shopping. And nobody looks at the paper in the hand. Look at the paper in your hand. If you have a pre-approval right now at home, pull up the document, pull up the PDF on your computer. Look at it right now. In big letters, it says congratulations and the dollar amount. Read the fine print. What does the fine print say? The fine print says this pre-approval is contingent upon the following. And they start listing all of the contingencies. It specifies right there in black and white that you are only pre-qualified based on the tiny bit of information that you have given us and the little bit of homework that we've done on you. And we can't possibly know if this is really real until you send us more information and we double and triple check that. And then we know for sure. Ladies and gentlemen, realtors at home, the buyer consumer, if that's you, that piece of paper that you hold in your hand that says, congratulations, you've been pre-approved for $1 million is not worth the paper it's printed on. If you're a good realtor, you know that. And what you're going to do is you're going to take that document, you're going to read it. Shoot, you might even take 30 seconds out of your day to get on the phone and call the lender and ask him about the client. Hey, is there anything? My client's getting ready to go shopping. Is there anything I need to know? First of all, good luck getting him on the phone. If you're working with one of the mega banks or credit unions or these other examples I just gave you, good luck. They work Monday through Friday, 9 to 5. Half the time they're on the lunch. The other half the time they're at the water cooler. You know what I'm talking about. They're hitting the coffee. They're on PTO. It's a weekend. You can't get a hold of them. Oh man, I told you the bankers are going to be pissed off at me when they saw this video. I don't care. I don't care. Step your game up. Step your game up. Start your own business. That's not a challenge. That's actually encouragement as an entrepreneur, from entrepreneur to entrepreneur, talking to the bankers. Now we have the buyer who is excited about going shopping. And they got a piece of paper saying that they can go shopping for a certain threshold. Meanwhile, they don't understand or they haven't read the document in full. They really don't have that approval. It's just a guesstimate. It's a guesstimate. Somebody guessed that you might be able to afford X amount of payment per month, X amount of cash to close, X amount of dollars for down payment, X amount of house you can buy based on today's interest rate. Total guess. Now comes the scary part. Imagine if the buyer goes shopping with a realtor who's like you, new, brand new, and you guys are out there and you're leaving work early. Consumer, buyer, I'm talking to you. I gotta get out of here at 4 because we have 6 showings lined up on a Wednesday, 5 o'clock, 6 o'clock, 7 o'clock, so on, whatever. And you, the realtor, are running around opening doors and showing houses to a buyer who hasn't been completely vetted for the loan yet. All they have is a piece of paper that says so. You might be wasting all of your time. The consumer, the buyer, you might be wasting all of your time. And it's never just the dad who's got to leave work early. It's the wife and the kids and the car seats and the strollers and the whole thing. The scary part is when they find a house they like. Here's where it gets nasty. You've looked at 12 houses. You spent 2.5, 3 weeks showing houses. They've seen several houses go under contract that they liked. Shoot, there goes another one. Finally, Mama Bear finds the house and she walks through the kitchen and she puts her hands on the countertops. I always know when the wife likes the house because she touches things. Yeah. It doesn't happen every single time, but after showing houses for so long and watching people's faces and reactions and body language and stuff like that, when they walk in, they go like this, they don't like a house. But I'll look back at the wife, and the wife is going like, she's doing this. I'm like, do you like it? I ask them, do you like it? And usually they're like, yeah, we do. And I'm like, cool. The next question is, do you want to write an offer? Well, she just fell in love with the house. Or maybe not love. Love's a strong word in this market. You like the house. We like it. We can see ourselves living here. Great. Do you want to write an offer? Yeah, I think we should. Okay, good. And now you're having this conversation about how much is the property valued at? How much should we offer? What should the terms be? Oof, terms. We're getting to that. Okay, Joe, we're ready to do it. Let's do it. We write the offer. So you take the offer and you send it over to the side for their consideration. Meanwhile, the consumer, the people at home, has no idea that their offer is the least attractive thing that the listing agent, that's the real estate agent who's selling the property, and the actual seller, the least attractive thing that they've seen all week is your offer that's tied to that terrible letter. Why? Why is it so bad? Well, I just got done explaining, but we're going to get into it more. Here's why it's bad. Number one, everything I just told you about the cringing of the face immediately takes your offer and knocks it to the bottom of the stack. It's not that your offer won't be presented. It will be presented. The realtor's job, per the code of ethics, is I will present all offers, all written offers, specified written offers. So even though it's a doo-doo offer, I'm going to go to my client and be like, this offer sucks, but hey, client, here's the offer. And you let the client assess. Obviously, the client goes back to you and says, well, what do you think? Then you tell them. You say the lender's terrible. You say the terms and the timelines are horrible. You say the down payment's not big enough. You say, I'm a little bit concerned because I know that this company doesn't underwrite their borrowers until later in the process. So in theory, the person that's trying to buy your house that just wrote this offer, we don't know if they can get the loan yet. We're going off a piece of paper. It's going to get scarier. Just getting started. You write the loan, or you write the offer. The offer comes over. They receive the offer. What's the first thing they look at? What's the first thing the realtor looks at when the offer comes in? I'll tell you, it's not the price. It's where is the money coming from? Is it a cash buyer? We get the offer. It comes in the purchase agreement's 15 pages long, and then there's like some addendums and there's some other documents that go in there. We get the offer. We go like this. We don't even care what we don't even care what the price is because the price is negotiable. It goes up, it goes down, it goes right. Price is going to change, right? We don't care. We flip to the back and we look at where is the money. It's cash. It's a cash buyer. Great. I see a proof of funds here. Strong offer. Then we flip back to the price and we look at the price. Is it high? Is it low? Is it good? That's when the realtors get excited. That's when the sellers get excited. Well, maybe it's not a cash offer. It's a financed offer. So we flip to that page and who do we see? We see the W or the B or the C. And we go, them. Then what's the next thing we look at? We look at the price and we say, okay, there's the price. Again, up, down, whatever. What's the next thing we look at? We look at the terms, the timeline. How many days of sleepless nights is it going to cost the realtors, both realtors, and the seller to finally understand that this deal is going forward or not? The mega banks, the credit unions, the other companies I've mentioned before need a huge amount of time to cross that threshold. In most cases, 21 to 35 days. There are a couple exceptions to the rule, like the independent mortgage brokers and loan officers. They can move pretty fast. If I had to guess, I would say maybe 10 to 15 days. But what if I told you, instead of waiting 21 to 35 days to figure out if this person can buy your house or not, what if I told you that you only had to wait 5 to 7 days? Everybody would want the 5 to 7 days. That's the reason for this podcast today. The general public doesn't understand, or they're missing it, that you have an option. You can go with the doo-doo terms and get doo-doo service and assume more risk and limit your ability to negotiate. Or, we're going to talk about it later. We're going to get into it. That's why you got to stay tuned to the end because I'm going to give all the secrets at the end of this. First, all the pain up front, and then the resolution and secrets at the end of this. So you can go the painful route, or you can go the super easy sunshine and rainbows route. So the reason why I can't divulge that yet is because there's still more pain that I need to drag you through. So not only does your offer look weak to the prospective seller, And not only does a seller counter you more aggressively, maybe they just completely decline your offer. Maybe they just turn around and look at other offers. But that home that the wife just got finished putting her hands all over the marble is gone. That time that you just spent driving in your car for the last 2.5 weeks for both people, just the realtor and the family, is done. And when the property goes under contract with a different person, that dream just burst. Now you got to turn back around and consider some of the other properties you've shown, or look at some of the newer properties that might be coming to the market, and maybe the next one's going to be a better fit. Doesn't have to be that way. But again, the general public keeps making the same mistake over and over again, and I want to change that with this video. Riley, knowing what you know now of what I've just told you, I'm gonna put you on the spot. What do you think happens in the odd, crazy event that the seller is desperate enough and they take that offer? What do you think could happen, might happen, once we go into contract and we start moving forward?
The buyer could possibly not have proof of funds or be able to afford the loan itself, and the contract could go through.
100%. Exactly. That's the right answer. So guys, remember, this never changed. He still hasn't been completely underwritten. And because these mega banks have these super long time frames, and again, not just the mega banks, all those lenders have big long time frames. Really, they sign a contract, congratulations for moving forward for the purchase. Here's what that looks like now. Give or take 7-day inspection period. Give or take 21-day loan commitment period. What happens during the inspection period? Inspections. What happens during the loan commitment period? Underwriting process. And during the underwriting process, that takes a total of 21 days, in some cases 35 days, the buyer still has a way to back out of the contract safely and unharmed. If you're a seller, it doesn't feel good for you with the prospect looming over your head that the buyer that you just signed a contract with might back out 3 weeks from now. 3 weeks from now. We're going to find a way to get it from 3 weeks down to 5 days. Talk about that later in the podcast. So we enter into a contract. Here we are, we're moving forward. The buyer's excited because they're going to buy the house that they want. The seller's excited because they got the price that they wanted. We're moving forward. The realtors are a little bit sketchy. They're sketched out because they realize they just went to contract with a terrible bank with terrible timelines and terms. But the realtors are also a little bit happy because they got a contract and they're going to move towards closing and they might get paid. Well, what happens? Well, guess what? It's a true story. I'll give you the ultra short version. About 1.5 to 2 weeks before closing. So fast forward, 3 weeks in, right? Towards closing. You don't get a phone call. You get a freaking letter in the mail. The buyer gets a letter in the mail. You open it up. What's it say? Sorry, but your loan has been declined.
How can that be?
How can that be? That's the first thing they say. How can that be? Followed by anger, right? Because remember, you've been banking with them for 20 years. You walk in and they smile and they say yes. And they give you the best of service and they assure you that everything's going to be great. Or remember, they took that file and they handed it off to a stranger and they shipped it out to wherever, and that person doesn't care and you're just a number in that system. Well, I want to know because this and that, That's the first phone call that gets made because the buyer is embarrassed. So they don't want to tell their realtor yet because they're embarrassed. They want to see if they can call the bank first and get it fixed so they don't have to make the awkward call to the realtor and say, hey, my loan was declined. What do I do? That's the next phone call. So the bank, good luck getting them on the phone. They're not taking your call. They know you're pissed off. So when that phone rings and they see your name on the caller ID and they know that the decline letter went out, guess what they do? They take a bathroom break. You won't get them on the phone. So then what do? You push 0. And then you get Shanae and customer service on the phone. And then you ask them what's going on. And they say, well, can't you read the decline letter? Right? Then the next phone call you make is your realtor. And I've seen this happen a dozen times. I've seen this happen personally at least 3 times, but collectively a dozen times with other people. Where that phone call is a panic. The buyer's panicking. They don't know what to do, especially if you're first-time home buyer or second-time home buyer. They don't know what to do. What do I do? My belongings are in a box. A moving truck is supposed to come in 2 weeks because I booked it and paid for it already. Husband, wife, and 3 kids and 2 dogs. Oh, and to make things even worse, we're selling our house. The other house that they have somewhere. Maybe it's in New York or something. Just to throw some more fire onto the logistic disaster that's happening right now. They're panicking. What do I do? They call the realtor. Now, hopefully the realtor has some experience while they're on the phone going, they know exactly what to say and how to help you and figure out what the next step is, which we're going to talk about right now. But when this happens, the realtors in the industry, we call it an ambulance loan because literally the loan died, it's dead, and we got to send an ambulance to come pick it up and try to bring it back to life. Well, what does the ambulance look like? What does the ambulance loan look like? Where was the ambulance lender from the beginning? Well, he was always there. But if you remember my first point, the realtor either failed to communicate or the consumer didn't do a good job of listening. Somebody's at fault. And that's the reason for this podcast. So I'm here to tell everyone today that there is an ambulance, but it doesn't have to be an ambulance. You don't have to wait for an ambulance to be needed to call them. You just call them first. And there's no need for an ambulance. Call it a limousine loan. And no, don't think it's like expensive. It's the same price. What I mean is the service is going to be paramount and the experience is going to be paramount. And the end result is going to be most advantageous to you, the consumer, and the realtors and everybody else who's involved in the deal. So in a best case scenario, when that happens, your experienced realtor will call the best lender to save the deal and get you home, hopefully on time. Might be a week late, might be 2 weeks late. Hopefully they get you in on time. In a worst case scenario, which I've seen happen a couple times before too, they send an ambulance, but it's too late. And now what do we have, guys? This is where I get a little bit serious on the podcast. We have a situation where a family saved a bunch of money to make their first home purchase. They put the money into an escrow account, down payment, closing costs. It's not uncommon to see $20,000, $30,000, maybe $50,000 into an escrow account. Very common to see that in the middle market. Now, at this point, they breached contract because the lender declined them. And the decline happened after the inspection period, after and outside of the loan commitment period. They are now an official breach of the contract. What is at stake? Not everything. And what I mean by not everything is like the kids and the dog and the cars and the watches. But everything as it pertains to the transaction is at stake and one step away from gone. Your escrow deposit, whatever money you have in there, whether it's $5,000 or $50,000, it's about to be seized. The house that you guys fell in love with, that you worked so hard to put the escrow deposit in for, that you want to move into, that you already called all the moving trucks and packed all your boxes and things, belongings in, it's no longer yours. It is getting ready to be put back on the market to sell somebody else. So now you've lost your $50,000 escrow deposit or whatever it is. Whatever's in escrow is gone because you breached contract. The house that you want is gone because you breached contract. Not to mention, if you bought the house 2 years ago at the beginning of COVID, let's say it was $500,000. Well, if you held it till today, 2 years later, now it's worth $700,000. You just missed out on opportunity of appreciative value of a home, $200,000. And I can't even begin to express to you the amount of stress that goes along with a financial pitfall like this one between the spouses, which could result in other things, dare I say, but I've seen it happen. Divorce, and then other things that happen after divorce. And I don't mean for this podcast to take a turn to the dark side, but things like suicide. And by the way, this thing that I'm sharing with you is not a one-off. I've seen this. I've heard about this, and I've seen it with other people. Purchasing real estate is not like ordering a pizza. Things can happen. People can get hurt. That's why it's so important that we know what we're doing, and you being new, that you delicately handle each transaction. And if you don't know something, ask somebody so we can help you. So we can get it done. Consumers, people at home, buyers, link up with a realtor that knows what they're doing, that has experience, and knows what they're talking about. Don't just hire the first person that you find. Sorry, but I'm just going to say it. Don't just hire your family member because they're your family member. You need to be really careful with this. So now we have a train wreck scenario where people lost money and they ended up, in a financial pitfall and it's bad. It doesn't have to be that way. This story, this podcast is going to end up in the positive, but I had to bring you guys down there because I wanted you to understand the severity of the situation when realtors don't communicate, and when, I have to be fair, client doesn't listen. This now brings me to my next point. Let's just say, for example, the buyer with the crappy pre-approval. Everything just lines up for him and it looks good. The only thing that we're really concerned about is the fact that we can't get the banker on the phone on the weekend because they're closed on the weekends. Let's just say in the rare event, that's the only thing that we're worried about. Are they still getting the best service? Are they still getting the best leverage in the deal? To the consumer at home, I'm going to tell you two things right now. I'm not going to get deep into them. We don't have enough time in the podcast. Cash offer programs to FHA borrowers and conventional borrowers. Is your bank offering you a cash offer option program? The answer is no, they're not. They're not equipped to do that. And quite honestly, for the most part, they're too boneheaded to offer it. I said that. I told you I was going to get a lot of bankers mad at me today. That's number one. Number two, is the property that I'm getting ready to purchase, does it qualify for an appraisal waiver? Appraisal waiver is when the bank underwrites you, the borrower, and they know and they're comfortable and they understand your entire credit profile. You're good, green light. And then they do the same thing with the property that you're buying. They underwrite and they know the property you're buying and they're comfortable and they're familiar and they know what the value is. And based on the two of you meeting both terms, they can waive the appraisal, the need or the standard of having an appraisal done. They can waive that, which does a couple things for you. Saves you money because you don't have to pay for an appraisal. So that's like $500 or $600, generally speaking. Two, it eliminates the risk of the property not appraising. And you, if you want to move forward with the purchase, having to come up with the difference. Quick example. Let's just say you want to buy the house, 500 grand. Appraisal comes in, 450. That means it's $50,000 short. Well, the next thing the lender's going to say is, hey, Riley, we love you. We want to lend to you and we want you to buy that house. Problem is, that house is not worth 500 that you're willing to pay for. It's only worth 450. Who's going to cover the difference? Now we have to renegotiate. The buyer and the seller go back and forth. Seller goes, well, you should pay for it. Buyer says, well, I don't have it. Seller says, well, I ain't coming up with it. Well, can we meet in the middle? Maybe that happens, maybe it doesn't. That's a different video. The point is that these other banks, the ones that I've described to you, either don't know enough or care enough to offer you those options. Most of the time, they don't care. Again, you're just a number in the system to offer you these options. Wouldn't you rather have those options?
Yes.
You can. And you will, and we're going to talk about that later on. So the next point that I wanted to make to you guys is timelines, which I alluded to earlier. Riley, you asked me the question before. You said, well, how much time or how do we do it? To give you an idea and to give everybody home an idea, when you're working with mega banks, credit unions, independent mortgage companies, any of those other companies that I described to you before, whenever we talk about these companies, typically they need 21 to 35 days to complete a loan commitment. What does that mean? It means exactly what it sounds like. It means they're not committed to giving you the loan, the one that they just smiled and handed you a piece of paper that said congratulations, and there's fine print at the bottom. They're not committed to what they just told you until 21 to 35 days of the loan process, which means on day 25, if they find a financial skeleton in your closet because it took them 3 freaking weeks to find it, that's how slow they are. That's how bad they are. And by the way, financial skeleton, I know people at home are going, I don't have any financial skeletons in my closet. Everything's so clean. No, it's not. No, it's not. Everyone has them. It could be you forgot to pay your phone bill. Or maybe you never forget to pay your phone bill because it's on automatic payments. Maybe it's you went ahead and financed a whole bunch of furniture before moving into your new house because you wanted new furniture for your new house. And now your DTI, debt to income ratio, is completely offset. And now you can't close. Congratulations. How do we fix it? The point is that if we find that out 3 weeks later, it sets up, as I've described to you before, a major train wreck heading into your closing date. It doesn't have to be that way. So again, they need 21 to 35 days to figure out, hey, is this loan getting done or not? That puts everybody else on edge. And then again, you have the independent mortgage brokers who can move a little bit faster, about 15 days. And very shortly, like I told you before, we're going to get to the point where I'm going to show you guys how to get it done in 5 days. All right, so we covered the time frames. So back to the story. Riley, let's just say in the rare event that everything is on track, it's moving forward with this terrible lender. Let's just say that we're still in the offer process. And let's say there's no other offers on the table. And the seller's like, wow, okay, we have an offer. It's with the W bank. We don't like the W bank, but it's our only offer. I think we're going to consider it. All of a sudden, another offer comes in. What does the realtor do? What's the first thing the realtor looks at?
Where it's lended from?
Yeah. They don't look at the price. The price is negotiable. They look at the lender. They flip to the back. And what do they see? They see the local lender who everybody knows, likes, and trusts. And then what does the realtor do? They go, yes. Just like that. I have video footage of realtors going, yes. Whenever that happens, I'm going to make a highlight reel of that one day. And I'm going to put it on the internet for everybody to see. This is the difference when you work with a realtor who everybody knows, likes, and trusts locally. Yes. Versus whoever you decided to get a loan from. Consumer at home talking to you. Whoever you decided to get a loan from. And the realtor's going, because they know the pain that's about to happen. I want to add one more thing that I just remembered. If you have like a family member or something like that, that's like a hotshot mortgage broker in New York, which everybody is a hotshot mortgage broker in New York, that's not helping you. Not in this market, not in South Florida. Because that hotshot mortgage broker in New York that does all that business, that makes all that money and has all those nice fancy things, great for him. It's not going to help you when you write an offer on the same house that somebody else wrote an offer on, and that somebody else sends their offer in, and the realtor does what Riley just said, and they flip to the page that has the lender's name at the top of the page, and they go, Mr. Jones, independent mortgage broker, New York, buyer's cousin, buyer's brother, whatever. And then they look at the other guy and they go, that's the guy we did 100 deals with this year. There's never a problem with him and his team. Shoot, I can get a hold of them 9 a.m. to 9 p.m. Monday through Sunday. That's the offer that gets accepted. So friends at home, it has nothing to do with, how big or, how successful or who my lender is, and you should know because I have a relationship with them and we have $50 million in the bank and I deal with the private bank and they write loans for me like this. That's all fine and great. But guess what? In the competitive arena, it means very little when you're going up against the best. Street credibility is what that's called, street credibility. When you write an offer and the realtor flips to the last page and they see who it is and they go, yes, this is great. They communicate that same message to the seller. When they present the offers to the seller, 1, 2, 3, 3 offers, seller, take a look. And the seller goes, okay, what do you think? First thing the listing agent says is, that one is awesome. Why is it awesome? And then the seller starts communicating everything that I'm communicating to you in this podcast. At least they should be. Well, because that one, they suck. You have to wait 21 days to figure out if he can even get the loan or not. This one, I never heard of him. Oh, he's a hot shot in New York. He does big deals in New York or Chicago or LA, wherever he's from. Doesn't matter. Okay. I've never heard of him. That's fine. Maybe in New York. That's fine. But we've never heard of him. Who's that guy? I mean, I could put you on the phone with him right now. Hello? Hey, the borrower, Mr. So-and-so. What can you tell me? Oh, hey, they're great. They're good to go. They're golden. Really? Nothing to worry about? No, they're good. Great. Wow. Doesn't that make the seller feel wonderful? Yes. Does that make the realtors feel good? Yes. Mr. Buyer at home, you should feel good about that. You should feel bad about the others. You should feel good to know that you're going to go out there and you're going to go shopping. You're not going to waste your time. And when you see the house that you like and you pull the trigger, your chances of taking it down are way better than the other alternatives. Let's just say we get beyond that and we're approaching closing date and we're working with bank. We'll use letter C this time. And we're approaching the closing date. This happens on every single deal. And if you're a realtor and you're watching this podcast, give me a thumbs up if you know what I'm talking about. Comment below. We're about a week or two from closing. The transaction coordinator or the administrative staff and the title company are talking because they're trying to get numbers all finalized. And then all of a sudden, a document is missing. Something's missing. Hey, we're still waiting for the lender to send us this so we can update that. Can anybody get a hold of the lender? So the realtor goes, well, let me call him. Nobody answers. And the realtor goes, I told my buyer not to use this lender. We always say that. Buyer, we put it on you. We put it on you. Hey, buyer, can you please get your crappy lender on the phone because we can't close because he's aloof. He's not answering his emails. He's not answering the phone calls. We need this document. We need this document in order for the title company to finalize what they need to do to get the numbers straightened out so we can close for you on time. Oh, shoot. Yeah, let me go ahead and jump on that. So the buyer on his lunch break or whatever does the same thing I just did. Makes a phone call, no answer. Shoots an email, no answer. What's going on? Clock is ticking. Finally, the lender gets, oh, hey, sorry about that. I was on PTO, paid time off. It's something that corporate America has. It's one of the reasons why I left corporate America. Sorry for the people watching the channel. They're like, oh, PTO is awesome. Not if you're an entrepreneur, it's not. We are always on the hustle. We are always grinding. We don't do 9 to 5. We grind. This is how it is. Anyways, I digress. Finally get him on the phone. Oh, shoot. Yeah, let me get that to you. So he finally gets it over. He gets it over. But now we're late. Now, this is not a disaster. This is not a train wreck. But still, you're late. You're late. And let me just give you a common thing that happens when you're late. Hey, we finally got that document back. We were supposed to close on Friday. But we don't have enough time to, as the way things are, we don't have enough time to get everything in line. And so we got to bump the closing to Monday. Can we ask for an extension? That's what it's like. Can we get an extension? It was like that. Is it a big It's not a big deal. It's not a big deal. Usually the buyer agent will go back to the listing agent and say, hi, sorry, they're late. It's not our fault. Can you please give us an extension till Monday? And usually the listing agent's like, let me ask. And they go and they ask. And usually it's not a big deal. Yeah, okay, extension Monday, fine. It's not always like that though. Sometimes during the transaction process, the buyer agent and the listing agent or the buyer and the seller get a little bit chippy with each other. There have been plenty of situations where there was some disgruntled people involved in the transaction. And from time to time, when that happens, the buyer goes, hey, sorry, can we get an extension? The seller goes, no. But then the wise agent says, Mr. Seller, I know you're upset. It's not wise to not give them an extension because all you're going to do is drag out a long process and it's just going to irritate more people and agitation is not good. You're better off just giving them the extension. We can close, you get your money, we'll be on our way, and everyone's happy. But guess what? In the real world, not everybody's so happy to just do that. So here's another real life example. Let's just say the extension is not Monday to Friday or Friday to Monday. Let's just say the bank literally says, hey guys, we thought we were on time, but we need another week and a half. You communicate that to the seller. Try to tell that to a seller who has a moving truck coming on Friday. What do you mean a week and a half closing? No. The moving truck that I booked 6 weeks ago and paid $6,000 for because they're expensive is coming on Friday to load my stuff in so I can haul to wherever I'm going next, wherever that is. And I need the money on Friday so I can complete the next transaction that I'm doing where I'm going to put all my stuff. Oh, well, we're sorry, the document was late, blah, blah, blah. Okay, well, that's not my problem. The seller's saying, this is the seller talking. That's not my problem. Well, how do we alleviate this? Well, a good realtor is going to say, sorry for the inconvenience. These things happen. We don't need to drag this out. Doesn't need to be painful. What we can do is this. Maybe we can come to an agreement. on the following. In exchange for an extension, tell me what your new absorbed expenses are, and we can come to an agreement where the buyer, who by the way is at fault because they're not on time. What do you mean the buyer's at fault? The lender screwed up. That's correct. The lender screwed up. The lender's at fault, but guess who's attached? The buyer. Guess who has a contract with your name and signature on it? The buyer. The buyer's at fault. So now the seller goes, Mr. Buyer, I understand that you're in a little bit of a predicament. We have a contract that says you're supposed to close on Friday. And now what you're telling me is you can't close on Friday and you need to close a week and a half later or whatever it is. Well, the problem here, my friend, is that it's going to cost me money. And guess what? It's not my fault that you can't get closed on time. So someone's going to have to pay for that. Well, how much money are we talking? That's the next question. Well, and then they start doing the numbers. X amount of days in a hotel, X amount of days of self-storage, X amount of days of whatever, right? And then the numbers start going up. Now, somebody who's reasonable is going to go, oh man, that sucks. All right, well, I guess we'll just come to an agreement and we'll just go ahead and sign off on that and we'll compensate you for the problem. But guess what? In the real world, not everybody just comes to an agreement like that. Sometimes they want to fight about it. And now we have a problem. And by the way, this is assuming that everything just went just fine up until the very end. And it's extremely common for these entities that I've shared with you to F things up at the end and not be on time. To be fair, it's also extremely common for the realtors to get together and file an extension where nobody's harmed and everybody's good. That's also very common too. From time to time, something bad happens, like I just told you. And of course, things could get worse if in the event of which people don't want to pay and then they end up in litigation and then the lawyers are involved and that's a whole other different train wreck. We don't have to go deep down that hole because that's actually the least likely scenario. That doesn't happen often at all. Could happen. Doesn't happen often at all. And so here we are. You got into your new home. You made it. Mega Bank B got the loan done. But when you look back and you summarize what happened and what could have been done better is this. Number one, the timelines could have been shortened in favor of you, in favor of everyone, not just the buyer. It's amicable between both parties. But the shorter timeline allows for people to sleep better at night because you, the buyer, don't wait around 21 days to know if you really got the loan. You, the seller, don't have to wait 21 days to figure out if the buyer really got the loan. Realtors, same thing. Rather, we wait 5 days and we know that we're locked in, ready to go. Let's ride. That's number one. Number two, because you don't have these things, these tools to your advantage, these shorter timelines, because you're missing them, when you write your offer, the offer you're writing is weaker compared to who else might be writing offers. Shoot, they might be using the preferred lender. If that's the case, you're getting blown out of the water. And then finally, the customer service. You got the company, again, Monday through Friday, 9 to 5. Your call comes in, they see you, they feel like going to take a bathroom break. Versus the other company, Monday through Sunday, 9 to 9. Everyone always picks up the phone every single time. The bad news is that after this podcast is published, people are still going to, 1, neglect listening to the realtor. 2, realtors are still going to fail to communicate. And 3, buyers are going to continue to run around and try to write offers on properties, assuming the highest amount of risk and having the least amount of leverage in negotiation. But not after you see the second part of this podcast, because now I'm going to give you the secrets, the tricks, the solution to success on how to avoid all that nasty stuff we just finished talking about and how we go forward from the beginning to ensure that you get the best deal possible with the best terms, with the least amount of risk and the best service to you. Stay tuned. So now that you have endured the pain of all the things, not all the things, some of the things that could go potentially wrong when a borrower decides to use their own lender, the lender of whom which is not a preferred lender in Florida. And I must specify, realtors are not allowed to dictate what lenders a buyer uses. That would be unethical. But a realtor, a great realtor, should be suggesting to their buyers great lenders to help them get the deal done, to help them get the best deal. Realtors should take a consultative approach with their buyers to help them understand the upside advantages and the apparent pitfalls of not working with the right lender, which we just finished covering. So at the end of the day, it's the buyer's choice of which lender they want to use. But if you express to your buyer the way that I have done to you now, at the end, it should be a no-brainer. And if you're still on the fence, stay tuned, because we're going to talk about the resolution, the resolve, the success, the firepower. The reason for the podcast is now. We're going to rewind back to where the first conversation had on the phone. And the buyer says to you, yeah, we're interested in buying a house and we've decided that we're going to get a loan. Do you know anybody that does loans? Make it simple. Yes, as a matter of fact, I do. I work with a local lender here in South Florida who everybody knows, likes, trusts, and has such great street credibility in the marketplace that when you write your offer, the seller and the seller's agent will flip the page over to the pre-approval document and they're going to know, yes, this is a great lender, which makes this a great offer. And there's very little to worry about in this transaction as it pertains to the financing aspect. And so we're going to talk about that now. So the first thing I want to say is this. If you, the realtor, have done a good job of communicating this to the client should be 100% on board. If the client has done a good job of listening to the realtor, then you should benefit from this as well. And now we have a good partnership. So now we're moving forward. So the first thing that I want to talk about, which I just alluded to, was street credibility. For our best case, we have the best lender with the best street credibility. So I've already told you that when the offer comes over, the realtor flips to the back page, they can see who the lender is, they're smiling, they're happy, this is a great reaction. Thank you so much for this offer. This is what I get. Thank you so much. Oh, I love this lender. We've done so many deals with them. We always send them our deals. Tell him I said hi, right? This is the reaction that we get, right? There's a major difference between when you write an offer and the agent on the other side of the transaction goes, and yes, that's the difference between them saying yes to you or no to you. And there's other variables in the equation, like how much did you offer and what are the terms, but that's a huge advantage for you. And it's not just impressing the seller. It's also a negotiation tool. You're going to beat out other people. It's a major negotiation tool. What if you wanted to renegotiate the terms of the contract mid-purchase and then suddenly you decided that you wanted to pull out of the deal? No. Seller doesn't want that. We don't want that because the last two people that came over here had a pre-approval from W and B Bank. We know that you guys are good and you can close in 5 days, not 21 or 35 days. Well, why are you leaving? Don't leave. Oh, it sounds like a relationship. Sounds like an interesting courtship. No, I make this analogy often. Same thing in the real estate world. You see a property, you like it. You make the offer. They say yes. You take them to the inspection period. You're on a date. You're holding hands. And you noticed a couple things. You're like, hey, I just noticed these things. Will you change this for me? Is this something you're willing to change for me? They might say, no, go pound salt. They might say that. Okay, well, all you can do is ask. Right? It might not be a deal breaker. Sometimes it's not. Sometimes it is. The point is that during the inspection period, you can renegotiate the terms before you move forward. And if not, you can't come to an agreement, you can always back out. What better way to ask for something from somebody than to know up front, ahead of time, that you already have the leverage? It's one thing to ask somebody for something in a renegotiation context, but you have no leverage. It's almost like, hey, I'm coming to you and I'm asking you for something, but I have nothing to give you. They're just going to be like, no, I'm good. But if you do it the right way, what's the right way? Well, the right way is like, hey, listen, we have this agreement and it's my intention to move forward. And you have something that I want. I have something that you want. But what does the seller want? The seller wants cash for the house, and they want the security and the safety to know that you can get that loan done in 5 days. Not 21 days, 5 days. Not 15 days, 5 days. And if you really wanted to, you can also close 5 days later, 10 days total. Now the seller goes, I'm hearing you. What is it that you want? As opposed to, don't ask me for anything. I'm not interested in getting anything. One person is listening. What do you want? And within reason, we'll reciprocate. We'll give it to you. The other person's going, I'm not hearing that. So the dating analogy is useful. I like using it a lot. But here we are now moving forward in a transaction with somebody who has leverage on their side. They have the ability to write an offer that's attractive, and it's very difficult for the seller to say no to. And then when they say yes, we now have the leverage to renegotiate, because the renegotiation is around our leverage to provide them something that they want. And as a result, when we ask them for something, the likelihood of them saying yes, or at least doing something that we've asked for, is much higher than the alternative. So now we're starting off with a lender who has street credibility that everybody knows, likes, and trusts and loves to do business with, which is going to give you leverage in your offer to get them to say yes to begin with. And two, it gives you leverage in your renegotiation period, in your inspection period, to renegotiate the terms of the deal. because you have something special. When dealing with the right lender, remember when I told you how the other lender, you give them their info and they take your file and they send it up and it just goes to some person in the cloud and they give you a piece of paper that says, congratulations, you've been pre-approved in bold letters, and the fine print says, really, you haven't? Yeah. Because we still don't know you. That's what it says. Well, guess what? When you work with this lender, erase that, throw that out. Because this lender, who I'm going to recommend to you guys, is going to find out everything they need to know about your lending profile within the first 24 hours of you sending them your documentation. They have 100 people in an office working Monday through Sunday, 7 days a week from 9 a.m. to 9 p.m. to service your file. But here's the thing, whether it's 100 people or 1,000 people or 10 people, the Navy SEAL teams, I think they run like anywhere between 6 people to like 20 people on one SEAL team. The bottom line is that they're the most efficient machine in the military. And that's what this comes down to, efficiency. So they can quickly take your file, quickly get your documents, quickly underwrite your file, quickly, without messing up, clear you, make sure that you are golden, good to go, green light, no skeletons. And then they issue you a document that says, congratulations, you've been pre-approved for a certain dollar amount. And there's fine print on that document too. Go ahead and read it. I'll send you a copy. The fine print usually says something to the effect of, as of the date of this document, you're good, right? Because no one knows what can happen tomorrow. Tomorrow you can blow your whole credit score doing something foolish. The point is that as of this, we've done all the homework on you. You're good. Which brings me to my next point. Because they do a full underwriting on the borrower, and because they are now extremely comfortable with that borrower, the lender is comfortable with that borrower, the borrower now has access to special tools which give them more leverage. I mentioned it to you earlier. One is the cash offer program. After you've been underwritten and after you've located a property that is also been underwritten, looked at by the lender, which is a very fast process, they will now approve you. They will now give you the option to check the box and write a cash offer for the property that you want to purchase for the purpose of making your offer look more attractive than the other offers that are on the table, making your offer look more attractive to the seller, causing the seller to say yes to your offer over other people's offers. And then after they say yes and you have a signed contract and you all agree to move forward, you now have the option to turn around, go back to the lender and say, please give me the loan. We're not using cash. Perfectly legal, perfectly ethical. All of the big investors do it. All of the best, most experienced, knowledgeable home buyers do it. All of the biggest, best, knowledgeable, intelligent realtors do it. Call me. I'll plug you in. I'll show you. You have leverage, number one. Because you went with this particular lender, not only do you get great service, not only can you go very fast, you have an option to use a cash offer only program. And the cash offer only program essentially allows for you to check a box and write a cash offer. You look good in the eyes of the seller. The seller says yes to you. You then turn around and get the loan. The only thing the seller cares about is that you show up to the closing table with the money, no matter how you got it. You got it. Well, Joe, are they not going to piss off the listing agent when you send an appraiser in? Maybe. That has nothing to do with the transaction. Has nothing to do with the contract between the buyer and the seller. In fact, there's a stipulation in the contract. There's a subsection within the contract that specifies that no matter what, the seller needs to cooperate with allowing for the buyer to conduct appraisals if needed. It has nothing to do with the fact that the buyer checked the box for cash or financing or not. There's a provision there. Option number 2 for leverage, appraisal waiver, which I described to you before, makes the buyer's offer stronger, makes the seller more comfortable, and it eliminates any risk of the property not appraising and then both parties having to come up with a difference, which is just unnecessary pain. So now we have 2 things right there. Just 2, there's several others, but that's 2 things that I'm highlighting on this video that is a benefit when you go this direction. Again, the other big banks, they either don't have it, they don't offer it, their programs don't have it, or quite honestly, I'm just being real, boneheaded. They're too boneheaded to have known it, to figure it out, or they don't care. They don't care enough to tell you. The next point that I want to make is this. Let's talk about the timelines. I've been alluding to the timelines the whole time during this podcast. When you're looking at the mega banks and when you're looking at all these other banking institutions, again, 15 to 21 days for a loan commitment. With our local lender, who everybody knows, likes, and trusts, that has all the street credibility, that's going to give you these leverages and tools to give you the best deal possible. We're looking at 5 days for an inspection, 5 days for a loan commitment. They run at the same time next to each other. So it's not 5 and 5, 10. No, it's 5 and 5 running next to each other together. And then if we want to, we can close in as early as 10 days. Ready for this? This is going to blow people's minds, both conventional and FHA. Yes, I just said that. I'll repeat myself. We can do a conventional loan or an FHA loan, 5-day appraisal, 10-day closing. Nobody can do that. Nobody can do that. If you find me one person, this is going out to YouTube right now. If there's one lender in America that can deliver these terms, conventional and FHA, 5-day appraisal, 10-day close in South Florida. If you can find me somebody that can do that, I'm going to give you a prize. I haven't thought this through. I'll give you something. So now we're in a situation, aren't we? We have something that's so scarce. And it's a necessity in order for someone to get a house. And it's also an option for the seller to consider how they're going to sell their house. The question, Riley, that I have for you and everybody at home is this. If you have 3 offers on the table and all 3 offers are the same in that they're all financed, they're all $500,000. This one here, you're not sure that they're going to be able to complete their loan for 21 days. This one here, they're not sure if they can complete their loan until 15 days. This one here, they know and they're committing and they're putting it in writing that we will complete our loan in 5 days. Which do you take?
Taking the last one.
Exactly. Why?
Because they get it done quicker and for sure the loan's approved and no problems through the contract.
Less risk. There's less risk and more speed to market. So the question is common for the people at home. Well, this lender, what are the interest rates like? What are the fees like? The answer is they're competitive. That's it. They're competitive. Well, what does that mean? Well, that means that, you consider what the market's doing and they mark to market and they're competitive on the rates. So whatever you're paying at bank with the letter B, whatever you're paying there, quite honestly, with a relationship discount, you know what I'm talking about. Let's be real. Is your relationship discount with your bank worth you not getting the house you wanted, defaulting on the timeline, putting your escrow deposit at risk, having to back up the moving truck and move your family back into your old house because you can't close on the house you're trying to buy? No, it's not. The timelines that I'm telling you with a favorable local lender that everybody knows, likes, and trusts are 5 days and 10 days. 5 and 10, 5 and 10. Now you might be saying, Joe, we don't want to close in 10 days. We have to close in 35 days because we need time to pack our bags and boxes. Great. Good. That's good. That's fine. You can still do that. In fact, if you really had to get competitive, 5-day loan commitment, done. 10-day close, meaning you own the house in 10 days, done. And then you give, I'm not suggesting to do this on all deals. I'm just saying you have this option if you have to get really aggressive on the offers. And then you give the seller 20 days post-closing occupancy, which means from the day of contract to closing is a total of 30 days, which gives everybody enough time to pack and move and go where they're going next. But the point is that the buyer had the leverage to close in 10 days. And then they let the seller stay in the house another 20 days. Maybe they rent it back for 20 days or whatever. Or maybe they stay rent-free. Point is now you have this option, which did not exist before with the other lenders. Some people call this creative financing. It's really not that creative. I call it common sense financing. I mean, it's creative, but it's not, it's common sense. Right. It's like, wow, why don't we just do this? Well, yeah, we can do that. You can't do it with the other banks. Can't do it because they fumble every time. So the reason why they can is because, number one, they don't have the service structure to service the account. So when you call them and say, hey, can you make this special exception? Can you get it done? The person on the other line is going, huh? What are you trying to do? What is that? And then you have to explain it to them. This is the lackluster service you get at these big institutions. And then you say, can you put someone on the phone, like a manager, and maybe I can explain to them? Then you get that guy on the phone and they're like, it sounds kind of like outside of the box of what we normally do, but let me check. They don't know what they're doing. That's the first thing. Second thing, like I mentioned before, they can't do it in 5 days. They can do it in 21 days. So if you think about it, going back to the dating analogy, you approach the girl and you say, hey, listen, within a week, I'm going to let you know if within a week of knowing each other, I'm going to let you know how I feel about you for real. This is a good analogy. I'm interested. Me too. You want to go on a date? Yes. Okay, good. You're on a date. Imagine saying to the person on the date you're with, hey, I'm not going to waste your time. The reason why I asked you is because I'm interested. And I'm also going to let you know that very soon, like within 5 days, I'm going to let you know what my intentions are, my exact intentions. Am I just flinging you around, or is my heart set on being with you? Women, right now you should be saying like, oh my goodness, that's amazing, right? Because what is the truth? Unfortunately, I'm talking about in the secular context. What is the truth? You meet a nice guy, you go to dinner. Does he tell you that he's going to tell you exactly what his intentions are within 5 days of meeting you? No. They drag out that relationship as long as possible. Right. Let's be real, to figure out how uncomfortable they can be with you, how much they can possibly tolerate you, to decide whether or not they're going to spend the rest of their life with you. That example is the mega bank example. And that's why they can't deliver. 5 days, loan commitment, done, clear. Everyone can sleep well. 10-day close. Want to close in 30 days? It's fine too. We can close in 10 days. It's up to you. Whatever's amicable between both parties. And finally, here we go. We've said yes. We're under contract. We're moving forward. You have these things in our favor as the buyer. By the way, to all the sellers that are listening right now, you should not feel like you are at a disadvantage. You should not. You should be comfortable in knowing that the buyer has the best lender, which is good for you because you know that these guys are not going to drop the ball. They're not going to mess things up. It's going to be taken care of. Now, from the art of the deal standpoint, from the negotiation standpoint, the buyer does have some leverage to ask for things like we talked about, right? Hey, listen, I have this really, really strong loan product. I was able to outperform other people. That's the reason why you chose me over them. I'm asking you to do something. Will you do it, please? And then the seller will say, hey, listen, we'll work with you on that. We get it. And usually that's what happens. Now, let's just say everything's great. We're moving forward. Green light, go. We're approaching the closing. And let's pretend for a minute that you, the buyer, the borrower, needs some type of service, whatever it is. The title company is calling. They need a document. Something popped up on your credit report. You need it fixed, whatever. I'm just making things up. Well, unlike the other example, where you have a hard time getting anybody back on the phone, this particular company that I'm talking about, again, Monday through Sunday, 7 days a week, 9 a.m. to 9 p.m. You can always get somebody on the phone who will service your account. And by the way, you're not just going to get some virtual assistant from another country. Not that there's anything wrong with virtual assistants from other countries. You know who you guys are. Because I work with people from other countries. But there is a service standard that people want, and when they need a question or they need something, they need some resolution, they want to be able to call someone. They want someone to answer their phone and help them, especially if they're local. Somebody answers the phone over there and they service you like this. Boom, like that. It's done. It's done. And they see you to the end zone. So you'll receive that level of service from beginning to end, and it's all done with the right lender. So everyone's probably wondering who the heck this lender is. So, ladies and gentlemen, if you want to know who the lender is, please click the subscribe button below. Give me a thumbs up. Don't forget to ring the bell next to the subscribe button so you can be first to be notified whenever we drop brand new content of what it's like to live in South Florida. As I told you, this is the first of our podcasts. This actually was a little bit of an experiment. I'm looking forward to building more of these out in the future. We're going to make them a lot more polished, but I'm glad that you're here with us today. So in order for you to plug into this lender, what I need you to do is to go ahead and call me. My contact information is on the screen below, right here. Call the number. I will answer the call. I'm the actual person who responds to the text messages and the emails. Call me. I will consult with you personally over the phone, and I will personally connect you to that lender over the phone through text and email also, and you can kind of pick it up with them there that way. That is in the best interest of everybody. It'll be best serviced that way. So here's the summary. Ready? The summary is this. If you're a buyer and you want to finance a house to purchase, don't do these things. Don't call your local mega bank. Don't call your brother who's a mortgage broker. Don't call the credit union. Don't call the other companies. First, contact a realtor in your market who does a lot of business. A lot of business. Google realtors in your city and click on each of the profiles and find somebody who does a ton of business. How many Google reviews do they have? How many Zillow reviews do they have? The reason why you want to find somebody who does a lot of business is because they will absolutely 100% have a local preferred lender who everybody knows, likes, and trusts in that local market. If you're in South Florida, call me directly. I will plug you into that person. Then you will be fast-tracked to success. You will not be hung out to dry in a bad transaction, which I see on a regular basis. Doesn't have to be that way. I also see tons of successful transactions. That's my summary gift for you guys. And to find out who the best of lender is near you, please contact me, and it'll be my pleasure to help you. Many blessings.